Welcome to Frazier and Deeter's Culture of Compliance podcast series, where we discuss compliance as a competitive advantage in today's marketplace. I'm Sabrina Serafin, partner and national leader of Frazier and Deeter's process, risk, and governance practice. And today we're talking to Bradley Carroll, a principal in our firm who is leading both our financial services industry group and our internal data analytics team. Prior to joining Frazier and Deeter, Bradley served in senior audit roles for banks of varying sizes. Bradley, welcome.
Thanks, Sabrina. It's great to be here.
Now, Bradley, a recent survey published by Frazier and Deeter found that over 50% of respondents were considering an increase in their use of data analytics this year. So today we want to talk about how internal audit teams can use data analytics effectively to enhance their team's performance and how it might work to ramp up use of analytics under the current remote work environment. So Bradley, can you start us off by first defining what you think of when we say data analytics?
Sure, Sabrina. I would say that data analytics is very equivalent to internal audit. We're constantly analyzing data, whether it be stratifying samples, whether we're testing attributes, whether we're manually scanning. A lot of what internal auditors have historically done is analyze data. When you hear the buzzword data analytics today, though, it's not talking about yesterday. We're talking about, in today's terminology, we're utilizing a software that is designed for auditors to be faster, more efficient, and provide better coverage. So that's going to help us eliminate our sampling risk. It's going to help auditors analyze multiple simultaneous scenarios, looking for correlation among data to help us look for the anomalies and to risk-base our audits. In today's society, companies are data hoards. They just continue to compile data on all of us, and that's where the term big data comes from. But how do you get through that big data as an auditor? You need new tools. And so when we talk about data analytics, we're talking about these new tools. And the tools are not really new. They have been around for a while. Back in the 90s, I used mainframe focus at Wachovia Bank. So I've been using this for a long time. So new is not really new. It's just a new concept to something old, and it's becoming much wider. And that's because we've got more powerful tools today, and they're in desktop versions instead of being mainframe versions. You don't have to learn the language as such. It's much more interactive and user-friendly. So that's why these are more widespread, why they seem new. And so when we talk data analytics, we're talking about these new tools that are much more widespread to provide better efficiency and help auditors add more value to what they're doing.
For those in the audience that are auditors, can you expand on the statement that you made that it eliminates sampling risk?
Sure. So we all know that sampling risk is the risk when you draw a sample, that the sample leads an auditor to conclude one way and express that conclusion on the population based on the sample. And the risk is that the population is not reflective of the sample characteristics. So your small sample provides one indication that is not reflective of your population. Using these new data analytic tools, we can eliminate sampling in certain areas so that we test the entire population. So if you're testing a population, you have no sample, therefore you have no sampling risk. Whatever the population tells you from your analysis is what it is. And one of the things that I have found is when you're eliminating the sampling risk, there's additional benefits. So typically, in yesterday's environment, we would tell a manager that we've selected a sample and our sample error rate is 25%. We're projecting that onto your population. So you've got a 25% error rate in your population, which means you've got 100 misstatements. Go find them and go correct them. Okay. What if it's not? What if your sample was highly skewed towards inaccuracies and the true population really only has a 10% error rate? You've got managers out there looking for ghost inaccuracies that they don't exist, but you've told them, based on our sample, it's 25%.
Okay.
When you use data analytics, you can tell them you have X number of misstatements in your population, and here they are. That adds a tremendous amount of value. So instead of telling them to go search for them, You're telling them exactly which ones they are. And when you get to that point, then you can provide a further data analytic and say, these are the ones in your population. And one of the similar characteristics we've noted about this, that this group is that they all have this characteristic. That's really providing value to management.
Okay, so you've got the auditors excited. You talked about big data and how organizations aren't just stewards and hoarders of data. So there's people listening who are thinking, great, this sounds wonderful, but how do we get started? What's your advice for teams who would be starting really from the ground up?
Yeah, so the first thing that I would tell somebody who's getting started is, what questions do you have? Define the questions to determine if data analytics can help you answer those questions. You can't go out and just get a data analytic tool and think it's a magic wand and you can start doing data analytics. It's a methodology like everything in audit is. So what questions do you have about the data? Can a data analytic tool enhance your audit coverage? Then get into the evaluation of specific data analytic tools. What tools are specifically geared towards manipulating the data and providing your answers? Who on your team has the aptitude? Do you have a strategic partner that can help you out to get you started? What is your budget? Do you need to do a cost-benefit analysis? And most importantly, have you looked at the free trials that many of these data analytic softwares offer to see how they're going to respond to your data? You need to talk to your IT department or your data warehouse, whoever owns the data, because data owners are very protective, and rightfully so, but they're very protective of their data. So when you start talking about, I want to strip the data out, I want to get a data download, they get nervous. And again, it's their data. They're supposed to be protective of it. So data access, you need to solve before you start selecting a tool. How are you going to get data access? Are you going to be granted data access? Is it going to be the tool going to be hooked up and running real time? Are you going to get periodic downloads? Are you going to get ad hoc downloads of data upon request? All of this needs to be mapped out and thought out, because that's going to depend on how you use data analytic tools and what data analytic tools are going to be in the right situation for you. You need to understand that data analytics is a step that's along down the process. You first start with data access, and then you've got to deal with data extraction, and then you have to deal with data cleansing, and then data manipulation before you can get to data analysis. So all of these are methodology components that you have to understand before you get started with this.
Okay, so can you walk us through an example then of actually using analytics to support an audit?
Yeah, so Sabrina, we've had a tremendous opportunity here at Frazier and Deeter to use some of these in our PRG group. One that was really interesting was we had a small nonprofit with limited staff, so their internal control structure is not mature, just because of the small staff. So occasionally they like to have some targeted procedures that are specifically looking for any potential fraud. Well, we were able to use data analytics in this area where we compared their vendor file to their employee file to see if any employees were also listed as vendors. So just using a simple list matching technique, we use IDEA software to do this. And once we had the vendor and the employee file, we also looked at payroll to see if there were any ghost employees on payroll. We found that some employees and some vendors had common addresses. When we talked to management about this, management knew this and understood this, but were very appreciative of the fact that we found this. We were able to find that some of their vendors had multiple addresses. And again, talking with management, they were aware of this because there were different subscriptions. So, for example, AT&T, they may have an AT&T cable and an AT&T cellular, which have different addresses, but it's listed in the books as AT&T. So our software picked those up as matches. We also found one address with multiple vendors. And again, it showed management this, and they were, again, that's great that you were able to find this. We knew that was happening, but not to this extent, and it forced them to go through and look at each one to validate it. So again, this was a specifically geared towards any potential fraud that we were able to use data analytics for. We have geographical concentrations with clients that we look at. So when we get their customer files, we can look to see how concentrated they are and how many dollars they have in a zip code or a state, how many clients do they have here. So it can show a geographical concentration on a map. We had another client that their model is a cost plus model. So they're hired to perform a service. They actually farm that service out to another vendor. And whatever that vendor charges them, they pay that vendor, provide a markup, and then bill their client. Well, there was an imbalance in the revenue and expenses, and so they knew something was wrong. So using data analytics, we took the invoices from their vendors and compared it to the invoices that they had submitted to their customer. And over the course of one quarter, we found that there was approximately $300,000 they had paid their vendors, but had not gotten invoiced to their client. So taking two different clients, two different companies, two different AP systems, we were able to extract and manipulate the data and compare it. And that was a huge, over one quarter, $300,000 that they had not invoiced but had paid out. We've done some journal entry testing where we've looked for duplicate journal entries, missing journal entries that are not balanced, journal entries that are over the limit for an approver or a poster. We've looked for journal entries that were posted on the weekends, off-scheduled journal entry postings. So there's just tremendous things you can do.
Thank you, Bradley. Those are great examples. And I heard you mention IDEA. So can you talk about other tools that you found most helpful for internal audit teams?
Yeah, so we use Teammate Analytics fairly widespread because it's an Excel add-on. They probably wouldn't be happy with me describing it that way, but that's what gets people motivated to use it because it looks familiar, it feels familiar, and it's a fairly powerful tool to get through a lot of your basic analytics. Yes, we've used IDEA and ACL. We have both of those. Are very similar softwares, but we have clients who have one or the other. So we want to make sure that in order to serve our clients, we're familiar with both of those. Tableau is a great presentation software. So it is the one that draws the pictures, the graphs, one of the best ones that does that. A big competitor of Tableau that we also have is Power BI. And we use Power BI to do the same things, to show the graphs, to drill down, to show the changes. And one we're just getting into is KNIME, which is KNIME, which is really good with big data sources. We actually use KNIME to help out with a payroll that we were looking at for a client. The client had right at 500 employees, so it was a large payroll, and they had it across 3 different companies. So in order to try to get their payroll, we use KNIME for that, which is one of our first introductions to KNIME and first real uses of it. So those are just some of the ones that we've used. There's tons of them out there. Most of them, as I said earlier, have free trials. Would suggest looking at what software you think is going to work for you and getting those free trials and giving it a test run.
Thanks, Bradley. Are there any other key pieces of advice that you could offer for teams that are considering ramping up their use of analytics, evaluating the different types of tools and solutions available? But what are the key pieces of advice you want people to walk away from before heading into data analytics?
Number one is start now. That's the first and foremost thing. There's a lot of intimidation with data analytics, the software tools, which causes inertia. We've always tested it this way. We'll continue to test it this way. That's not leading edge. That's becoming where you're falling behind the average. I mean, you mentioned earlier that 50% of our respondents say that they're moving forward with the data analytic program. So start now. Talk to your staff. Find someone who has the aptitude and the interest to pursue some of these trial versions of the software. Go through your audit program. Look at the attributes you're testing and say, could data analytics be used to test this attribute? And will it provide more audit efficiencies? Hook up with an experienced partner. Frazier and Deeter's got several people who are experienced with data analytics. Our very own Bill Godshaw just graduated from the Harvard Business Analytics program, which is it's a huge, huge accomplishment. So we're real proud of that and love to have that experience on the team. But, don't let intimidation and inertia stop you from this. The IIA over the past year has put out the Data Analytic Mandates Part 1 and 2. I would recommend going to their website and downloading those. So the IIA is telling you that they expect auditors to be using data analytics. So I'll go back to what I say, start now.
Well, Bradley, thank you so much for being with us today and sharing your experiences with data analytics with our listeners. And to our audience, thank you for listening to Frazier and Deeter's Culture of Compliance podcast. And please join us for our next episode as we continue to discuss transforming compliance requirements into investments in your business.
Thanks for listening to one of Frazier and Deeter's branded podcasts. To learn more, connect with us on LinkedIn or visit us at FrazierDeeter.com and be sure to subscribe so you never miss an episode.